deflationists say if the treasury is getting this money from banks, it can't be inflationary because it's not new money. Except that it is new money because these are bank reserves. These are bank reserves. The treasury never had that money before. The bank reserves were never, and I repeat, they were never ever in the economy to begin with, unless it was bank reserves from deposits, from customer deposits. So this is actually very interesting. So what happens is, the Fed basically says, okay, we will give you bank reserves so you can buy treasuries, and then after that you will give us these treasuries. So the banks are buying these treasuries at auction with the Fed's money, with the money that the Fed gave them, because the banks or the primary dealers are playing the shell game with the Fed. So the banks know that the Fed needs these treasuries so that it can keep interest rates low, and the banks also want money. They want bank reserves so that they can gamble in the stock market and borrow other banks or something like that, because you can't do a lot with bank reserves because it's not real money. So you just have to go ahead in the financial market casino. But regardless of that, what happens is, the Fed knows that the bank wants bank reserves and the Fed wants treasuries. So the Fed gives the bank reserves first. This is something we have to explain explicitly. We have to explain it very carefully. The banks get the bank reserves from the Fed first, which is an excess reserve. I spoke about excess reserves. I'm not talking about the normal bank reserves, which are from customer deposits. That's why deflationists are saying it's not inflationary, because if they're using 10% of customer deposits to buy treasuries, it's the same money that's just recirculating. Well, that's not true, because they're not using the actual bank reserves. They're using excess reserves. That is what they're using to buy treasuries. And where does the banks get money from excess reserves? They get it from the Fed. So the banks sell treasuries to the Fed, and the Fed just credits their excess reserves with more excess reserves, right? With more excess bank reserves. So this is all inflationary because that money came out of nowhere. Even though the Fed isn't directly buying it, what is happening is the Fed is basically playing a shell game with the primary dealers. As George Gammon likes to say, I forgot to credit him on that. The banks are playing a shell game with the Fed.